I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
We're chatting with Sean Brodrick. He's the natural resource specialist at the Oxford Club. His website, investmentu.com. And check out his best-selling book, The Ultimate Suburban Survivalist Guide, The Smartest Money Moves to Prepare for Any Crisis. Perhaps they've read your book in Britain and they're getting all ready for the Brexit vote, Sean.
Well, it is funny you should mention that because the Royal Mint over in Britain says that its online transactions are up 32% in a month. In other words, people are actually buying gold ahead of the vote.
And would you say that it was still a good purchase whether they vote to leave or not?
Well, I believe that in U.S. dollar terms, God, I sound like that idiot on TV when I say that. But in U.S. dollar terms, last week I got a new target on gold, which is 15.19, and we should hit that sometime next year. I'm thinking probably the first quarter, the way things are going. And yes, I think gold looks wonderfully cheap right now. The fact that we've had a recent pullback just makes it all the cheaper, and it's hard for people to actually buy things when they're pulling back. That's part of like market psychology. But in gold, we saw a 4.5-year long bear market. That bear market has ended. The ordinary bull markets in gold last 5 to 7 years. So any pullbacks in gold and in miners can be bought now.
Is gold seasonal? I have kind of noticed that over the summer the prices tend to fall, and then in the fall when markets usually do their corrections, and lately, like last August, the correction was huge and down, that's what kind of spurs people into thinking about gold again.
I think that is certainly part of it. Gold is seasonal anyway because of the Chinese holidays and the holidays in India and in the Middle East. There's big seasonal demand for gold there because it's kind of a cultural thing. But it seems that people are becoming more worried about the markets. As they become more worried about the markets, the stock markets, they tend to look for harbors of safety, and gold definitely is one. And since the interest rates have gone down so far, the cost of holding gold becomes negligible at this point. And so, that's really a weight lifted off gold, and so it can really go higher.
The IMF now predicts that U.S. growth will be lower, 2.2% this year. Has there ever been a year where they've actually met their growth predictions?
I don't know. You're putting me on the spot there. I do know, because I was doing a study on this recently, is that back in the 1970s, we used to have much higher growth than that. And over time, the amount of growth has gone down, till we get to this measly amount, really, as the amount of central bank intervention in the economies has gone up. Now, we aren't sure if those two are directly related, but they might have something to do with each other. Also, and it's interesting, you should bring up growth, is that Janet Yellen, when she spoke on Tuesday, said that stocks were fundamentally overvalued on a price-to-earnings valuation. Part of that is because the price is based on earnings, which at 2.2% growth you just aren't going to get, right? And if the U.S. dollar stays stronger, which it seems to be doing right now, then that really chokes off the growth for those U.S. companies which sell things overseas, which in the S&P 500 is at least 3/4 of them. So, it's a tough earnings squeeze. It's a tough problem with that. And so that does tend to make the market overvalued. But there's two things that we have to remember because this is summertime. One is never short a dull market. I was told that when I was younger, and it's absolutely true because the markets are so thinly traded that if the bulls do get some like momentum behind them, they can really run things to the upside like you wouldn't believe because the market is dull. Everyone is at the beach, so those runs can really take off. The other thing is that the central banks will never miss an opportunity to pump things up. And sometimes they do it publicly, and sometimes they do it in ways that are kind of sneaky and, not really noticed by the public, but pumping up is done. In Europe, it's being done quite blatantly with the central bank over there buying corporate bonds. They're actually going into the corporate bond market and buying bonds. What does that do? That gives companies over there scads of money, which they are then expected to put to use investing in equipment stuff. There's no law that they have to invest in equipment. I would pass that law before I went and bought those corporate bonds, but they haven't. So what will the companies do with it? They will speculate, right? And so that's going to drive up the price of stocks and stuff like that because they'll be buying other companies that they think might be undervalued in that kind of environment where the government is literally handing out free money to corporations and telling them to go play with it. So those two things could keep the market elevated, even though, as Ms. Yellen said, or I should say Chair Yellen said, the market seems overvalued on a price-to-earnings valuation. But just because it is doesn't mean it has to go down.
Well, didn't she also say we've looked into negative interest rates?
Yeah, that really got my attention when she said the Fed had looked into the legality of negative interest rates, and there's no legal reason why they can't do it. Now, she did emphasize that the Fed considers itself to be in a hiking cycle, and so therefore they're not really thinking about negative interest rates. But if the global market forces your hand, which it might, then there's nothing legal to stop the Fed from actually going into negative interest rate territory. Now, why would the Fed feel forced to do that? If other central banks around the world continue going into negative interest rate land, their currencies will lower compared to the U.S. dollar, and the U.S. dollar becomes unconscionably strong. I mean, just so strong that our companies trying to export just can't do it. In that case, the Fed might have to lower interest rates just to stay competitive. It becomes a race toward the bottom, but that kind of thing can happen.
We'll have more with Sean Brodrick right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Sean Brodrick. Sean, the International Monetary Fund has downgraded the U.S. growth prediction for the year to 2.2%. It seems to me that they've made these predictions about future growth at the start of the year. They always say, it'll be 3%, then it's 2.8%, then it's 2.2%. And by the end of the year, they're wildly off base. Why do they keep giving us these high-balled predictions that they know are very unlikely to come true?
Well, you have these economists sitting around who are drawing fat paychecks. They have to do something to justify that, right? And don't blame them too much. I mean, everybody's predictions run into some kind of choppy weather. Let's look at oil predictions, for example. Many people were thinking that, like around the end of last year, that oil use was just going to go down and down and down. It turns out that the world ended up using 1.9 million barrels per day more last year than it did back in 2014. And it's supposed to increase 1.5 million barrels per day this year and 1.5 million barrels per day in 2017. Are those predictions accurate? Probably not. But this is the thing that everybody has to make some kind of predictions So they have some kind of thing to work with. Why the IMF? I mean, the IMF isn't really making bets on this stuff, so I don't think they have to make predictions. But again, the economists have to justify what they do. So they will come up with predictions about this or that. I tend to look at the overarching trends. Certainly, global oil demand, just to stick with that for a minute, is going up. I mean, low prices helped spur demand. And also, not here in North America, but in other places in the world, we've seen coal-fired power plants shut down, and they've replaced them with oil-fired power plants because oil is so cheap. It's actually gotten to the point where it's cheap enough that you can run a power plant on oil as opposed to coal and make money and have much cleaner air. So they're kind of happy about that. So there are things that are supporting oil demand that should probably remain in place. That includes the growing Chinese middle class, a growing Indian middle class. Not only are they driving more, they're flying more, and that pumps up the demand. So we have higher demand on the supply side. Venezuela looks like it's about to fall apart. They're actually having food riots and stuff like that. Nigeria, which was the largest producer in like Africa, is no longer because it's really fighting a serious insurgency, and that's in the south. In the north, they've got the Islamic insurgency, so that country's kind of falling apart too. And so there's a lot that can go wrong with oil supply. So I think my own forecast is things actually look pretty bullish for global oil prices right now. And, of course, as prices go higher, we'll see more supply come in from all those shut-in wells that we have across North America and elsewhere. But things look more bullish for oil than not, so that tends to be the way that I'm playing it. And at times people will ask me for hard numbers on the price of oil. I try to give them a range. Really, I do. Because oil is just so volatile, and so many things can go wrong, and so many things can affect the supply-demand situation. But I have to make my predictions, too, because I have my own bets to make, and I have my own things to think about. So, yes, the IMF is wrong a lot, just to get back to your original point, but they're in the business of actually making these predictions, so of course they're going to make them, and I don't hold it against them too much when they're actually wrong on them.
Tesla shares dropped when they bought Solar City today, but everybody's going, is Elon Musk crazy, or is he crazy like a fox?
Well, that's a good question. I mean, in fact, I was looking at a chart of Solar City, and it's down. So, the market really does not like this deal. They don't. They think that Elon Musk is making a terrible mistake. But, he's a smart guy. He might be planning to use the excess provided by those big solar farms to actually power up cars. That might be one thing that he's actually thinking about. And so and you would think he would crunch the numbers before he makes that kind of bet, right? I mean, he wouldn't just throw money around willy-nilly. He'd actually have a plan. So maybe he knows more about this than his detractors do. And so maybe it's a buying opportunity. That said, I have a friend who's been short, like, he's been short Tesla all year long, and it's been a great trade for him. It really has. So, that's a really problem with, like, market hype, is that companies get talked up, and sometimes there's no there, or they need to be at a much lower valuation than they are. So perhaps Elon Musk is just really getting to the point where people are going to say, he's not such a genius at business, and so we'll see a lower valuation for both the company he owns and the ones that he wants to buy as well. But I certainly support electric cars and the electric industry. I think that's great. I think that's really transformative. And I think 10 years from now, we will be seeing some stuff that you would not believe, much of which actually becomes more economic because the price of doing this just comes down and down and down, so it actually can compete with like internal combustion and like all that stuff. So I think that's a good, really positive trend.
Well, Tesla 3 the car that they say will cost $30,000, so it's in line with a lot of sedans, and you had 400,000 people put down $1,000 to buy one. Now, you talk about capitalization.
Yeah, there is some question whether he can actually build all those cars.
Well, of course, but Tesla has always, now somebody said, now here's another business strategy he has. He sets impossible deadlines for his employees to meet so they work harder.
Yeah, and in fact, one of my coworkers just bought one of the X's, and he says it's amazing. He was out driving with his son, and his son was driving, and his son just floored it, and the acceleration in that thing was just insane. It really takes off. It's a beautiful piece of machinery. He could not stop raving about it. So that's the one nice thing about those cars is I guess once you own one, you really don't want to go back because they're so cool. So good for him on that, I guess.
And for people with range anxiety, the computer on board tells you when you're about to run out of power and where the nearest charging station is. And I have a friend, too, who owns a Tesla, and he says, I can now, plan long-distance trips because it tells me exactly where the nearest charging station is and when I should be heading for it.
Oh, that's cool. Yeah, it's a lot of great technology. Sometimes technology is scary. I can think of plenty of things that are scary. For example, low-income jobs are just disappearing. Either people are being replaced by robots, by technology, by apps. And so a percentage of working age who have those low income jobs is just falling off a cliff. Those guys just can't find jobs. They were used to just, going along in life, maybe having an entry level job and stuff like that. Those things are being wiped out. That's technology that's scary. But the stuff that's produced with these cars and stuff, that's great. So that's the good news, I guess.
In the European Union, they're looking at a proposal that robots will be classified as electronic persons and their owners will have to pay social security taxes, employment insurance, I guess Medicare premiums to help pay for the people replaced.
Medicare for a robot.
Well, but
that
you see,
makes no sense to me.
every robot that replaces a person the owners will have to pay taxes to support the people displaced by the robot. That's the proposal.
That sounds endlessly complicated to me. And again, government overreach. I support things like a basic income. I think that's a good way to go. It'll stop riots in the streets when the robots really start to take over. Because I do worry about that kind of stuff. People just really getting worked up when jobs just start to completely disappear, which I think is probably 20 years down the road. But, the problem with the EU, and the reason why Britain wants to leave, I think, is the over-bureaucracy, just bureaucrats dictating every single aspect of your life. It's maddening. If I lived in Britain, I don't know how I'd vote, but I do know that the way Europe acts, would really, really tick me off. Also the fact that they're unelected, right? If you live in Britain, you expect to live in a democracy, and yet there are unelected bureaucrats from Europe deciding what the hell you get to do. And that would really, really tick me off because they aren't accountable. In fact, they've been using Winston Churchill on posters supporting staying with the EU. I can't imagine Winston Churchill, who fought for British freedom and independence so much, ever be in favor of joining the EU. That would have just driven him into the grave if he wasn't dead already. So it's a really complicated vote that they have coming up. I don't know which side will win. I've seen these polls that are all over the place. Frankly, I don't know which one to trust on that. I do know, though, by the way, that even if Britain votes to leave the European Union, they have such strong economic ties and treaty ties that it really won't change much, which makes you despair of democracy that, in the first place, because even if they vote to leave, it won't change things that much. And so that just kind of makes you sad, I think.
Well, Prime Minister David Cameron saying if you vote to leave, you can never go back. You will always be excluded. I can tell you as a Canadian, Quebec has had so many votes about whether to leave Canada or not. And when they don't like the result 10 years later, they go and vote again. What's to stop another vote from 5 years from now or a year from now?
Well, first of all, Cameron would look very good in a prison uniform. God, they have had some absolute scoundrels in the highest position over there. That and his predecessor was a complete scoundrel. So, yeah, you can expect him to talk his interests. And remember, he comes from a family that runs one of those shady offshore hedge funds. And when he was asked about it in Parliament, if he had any shares in it, he said, I do not own any now. He'd sold them the day before. So, there's a guy that I can really count on to represent the interests of big business and not the common British person. I don't know what the right vote on this Brexit is, though. I mean, I've heard arguments from both sides, and they seem to take the same facts and come up with completely different, end games on it. I don't know what makes it, but I do know that even if Britain votes to leave, it won't make that much difference, at least not in the short term, because of the existing treaties and all that stuff. So, it did pump up the price of gold for a while, and then when the new polls came out saying that, Britain was going to stay in the EU, that's what pushed the price of gold down in its most recent move down. But anything can happen tomorrow. And I really think it's a short-term thing, and I would really look at the longer-term fundamentals, which is we have falling global our production of gold. In fact, some head of a mining company was just on the TV the other day saying that he expects gold production to fall 8% by 2020, which is huge. So just because of mines shutting down, stuff like that. Of course, if the price of gold goes higher, everyone will want to open new gold mines, but the problem is it takes years and years to do that. So maybe he's accurate about what he's predicting. We'll have to see. I think that the long-term fundamentals for gold look great, and the short-term stuff, if it does plunge again, I think that's really a time to buy, but we'll have to see how it goes.
Well, especially if supplies are diminishing.
Yes.
Sean, thank you so much for chatting with us.
It's always great speaking to you. Thanks very much.
My guest has been Sean Brodrick. He's the natural resource specialist at the Oxford Club. Their website, investmentu.com. You're listening to HowStreet.com radio. You can find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.